So investors love buying stocks on 52-week lows and taking advantage of a potential bounce back in price. But the company I'm going to be talking about today, a blue chip Canadian dividend stock in probably one of the most protected industries in the country, has bounced back from 52-week lows and is now trading at a spot where investors are now questioning whether or not there's still value there. So in today's bull versus bear case video, I'm going to be going over Toronto Dominion Bank. This is a very, very popular stock right now, primarily because of the volatility in its overall share price. A lot of investors have been buying, but now that it's rebounded in price, they're questioning whether or not they should continue to buy. But before we get into the video, I have that free report in the description on 3 of my top stocks for 2025. This list is up 21% year to date compared to the S&P 500's returns of just 2%. You could have gotten this report absolutely free. I've been publishing it for a few years now, updating it frequently, and you're going to want to head down below to the description, grab that report. It takes just a couple of seconds. And as always, like the video, subscribe to the channel, and let me know what stock you want me to go over next, because I make these videos from the comments of what investors want to see. But let's dive right into TD Bank. So what is TD Bank? They are the second largest bank in Canada. They are a globally, systematically important bank along with Royal Bank, which means they are effectively important to the global financial system. They are, you could say, too big to fail. That's certainly not to say they aren't too big to not perform poorly. They can definitely perform poorly. These banks are just so intertwined in the global economy, they are likely to stick around for a very, very long time. Now, for a very long time as well, TD was once known as the strong performer in the United States. It has one of the largest exposures to the United States out of any of the big 6 banks, and for many years, it was one of the main drivers of their growth. They operate very well in the Canadian arm, but their U.S. arm was definitely putting up a lot of strong results. So the bull case for this company would be on the valuation side of things. This company is trading at a big discount to other major institutions like Royal Bank, National Bank on a price to book basis and a price to earnings basis. And this is because some of the headwinds I'll mention in the bear case. When we looked at the company trading at around 12x forward earnings, we're looking at a discount to National, we're looking at a discount to Royal, and we're looking at a discount to Bank of Montreal, despite at least before these AML issues came up, putting up some of the strongest results out of the big banks. The other bull case here would be that attractive dividend. Now, I'm not one to focus on dividends overall. They are simply a portion of total return, but there's no denying the fact that TD yielding in the mid 4% range is definitely attractive, especially considering the payout ratios are just over 40%. So the dividend is well covered. It should be able to continue growing the dividend, which ultimately should benefit shareholders in terms of that portion of total return. And if we combine both the attractive dividend with the potentially discounted valuation, we get a situation where TD Bank could provide one of the stronger returns moving forward in terms of total return if that valuation gap would close and that dividend is still continuing to be paid and continue growing, which I have no doubt that it will be. So we get into the bear case here, which is going to go a bit more in depth on the company's current troubles. We're talking about the anti-money laundering situation. The company got caught up in some AML scandals over the years, and it has had an asset cap placed on its U.S. assets. This is a company that depended a lot on U.S. growth. Yes, it did grow in Canada, but with it having 40% of the business located south of the border, the cap on that portion of the business's assets is definitely one that is going to hit it on an earnings front. And if we look to an earnings per share chart from Toronto Dominion Bank, prior to the sale of their Schwab shares, which caused, as you'll see on the right-hand side of this chart, a huge jump in earnings per share, this is a company that really did not grow earnings per share over the course of a decade-long time period, because we see up here in 2023, this is when they started to get into those anti-money laundering issues, and earnings were hit materially because of these issues. The company I do like to compare this to is Wells Fargo, which had an asset cap placed on it due to some accounting fraud that it had committed in the United States. They put the asset cap on the company in 2018, and as you can see here, The company effectively was dead returns for the better part of 6 or 7 years. This asset cap is still not lifted, and U.S. regulators are very, very stingy when it comes to this. TD expects the AML issues to cost it $500 million a year through 2026. As we can see here, they really don't expect any sort of resolution through 2028. This is going to be a long-standing issue for the company, and then when we combine that asset cap, it could ultimately impact earnings growth south of the border and force them to expand in Canada, which is a hyper-competitive market that they already have a huge market share in. The other bear case would be rising provisions. If we looked at this chart here for allowance for credit losses, TD Bank has the worst ACL ratio out of any of the banks, 101 basis points. So this means they have the largest amount of money set aside for bad loans out of any of the big banks. When we consider the amount of loans this bank has, that's definitely something investors need to consider. So overall, what are my thoughts on TD? I am not a buyer at these levels. I actually ended up selling the bank in 2023. I did not want to deal with that entire situation. The bank has been a big laggard over the last few years. Even though, its share price has recovered a bit now, I'm still not a buyer of the bank. I think companies like Royal, National, and even to a certain extent CIBC are much better institutions. Now, keep in mind, TD Bank is a high-quality institution. I have no problems with it whatsoever. I'm mostly speaking on the fact I would not buy it when comparing it to the other big 6 banks. I do not feel that TD Bank is a poor company. I just feel it is inferior to something like Royal, something like National, which are the banks that I own. So everybody, that's it for the video. This was a tough one to get inside a 5-minute period. If you want me to do a more in-depth analysis on TD Bank, drop a comment down below. I'll see if I can make an entire video where I dive deep on the bank, but I need your feedback to let me know if I should even do that. And as always, those 3 stocks in the report below, they've absolutely crushed it over the last 1 year, 2 year, 3 year period. You can grab that report absolutely free, and make sure to drop a comment as well on what stock you want me to go over next. And we'll see you next time for more great Canadian content.